Consumers and businesses are struggling with high interest rates. The New York Times says startups and small businesses have been forced to adapt amid the high costs and the scarcity of capital. So joining us now here in Studio 57 is CBS News business analyst Jill Schlesinger to talk a little bit more about this. So, we've been having this conversation about sky-high interest rates, but usually it's related to the housing market, not to businesses. But, you can't grow if you can't get money to invest.
Right. And I should just make everyone aware of the fact that we talk about the Federal Reserve and what the Federal Reserve's role is, but obviously the Federal Reserve is trying to fight inflation. The main way you fight inflation is by increasing short-term interest rates, which is why we're up by more than 5% since March of 2022. The effect is supposed to slow things down, right? It makes the cost of capital more expensive. And as a result, it should hopefully slow down the economy and get prices under wraps. Okay, so prices have come down, but longer-term interest rates, which the Fed does not control, have surged. In fact, we've seen the 10-year Treasury up above 5%. And so when you ask about which sectors are really feeling the impact, I think first it's a big versus small factor. So small businesses almost across the board that have some sort of revolving business loans, they are getting crushed. Their bigger competitors were able to lock in rates when they were much lower. And a lot of these smaller firms couldn't do something like that. And then when you get into the particular industries, obviously anything that touches the retail sector, consumers, or real estate have really felt the pinch.
I imagine there are businesses that, it's part of the business model that you overextend yourself for 6 months and then you reap the profits later. But you have to have the ability to overextend yourself. You have to get those loans.
Well, let's not say overextend yourself. Okay, let's say invest in ourselves. Okay. So, right. I think
that's me personally.
No. We've stopped that now. I think what's important about a small business, I owned a small business for almost 15 years, and you're in a situation where you see opportunity. And that's the beauty of being a small business owner. You can be nimble. How do you take advantage of that opportunity? Well, you can either get a new investor to actually invest in you, an equity investment, or you can borrow money. And when you borrow money, again, you're absolutely right. What you're saying is, I'm going to try to get a new location. I'm going to expand the services that I provide. I'm going to bring on more staff. And the money has to be used in a quick procurement so that you can reap those benefits. But as a result, you're stuck with a loan that maybe now is about to come due, and now you have to refinance it at potentially 300 basis points, 3% higher than you initially took that loan out for. And that's really the crunch that small businesses are seeing.
And Jill, I want to look ahead to next week. Obviously, a very big meeting coming up. The Fed coming together once again to decide on if they will hike rates. No hike last time around. What do you expect this time around?
I think the expectation is no action. And it's partially because of what I said to begin with, which is that longer term and intermediate term interest rates have gone up. And those rates rising have actually put the brakes on a lot of the activity that we had been seeing. Also, let's be clear, inflation has come down. So I think the Fed will hold steady at this meeting. Jerome Powell spoke this week here in New York City, and he seemed to indicate that while they may leave rates at these higher levels for longer to make sure that they do keep inflation under wraps, that increasing rates didn't appear to be on the table. I say that with my very sophisticated Fed decoder ring. I keep that in my back pocket.
People would pay good money for that.
Exactly. Now, there's one more meeting after this October 31st and November 1st meeting. And right now, the bond market, which is kind of a way that investors can bet on whether or not they think interest rates are going to rise or not, is actually showing that maybe there will be no further increase at the December meeting, the final meeting of the year. Just about a 20% chance that the Fed will raise rates in the December meeting.
So is no increase the new relief? In other words, hope for interest rates going down, that's off the table probably for a while.
Well, listen, things can change.
Okay.
So I don't want to say, I think just in the same way Jerome Powell is not going to come out next week and say, mission accomplished, we're done, because he doesn't want the market to believe that. On the other hand, the Fed has reversed course over the last 2 or 3 years pretty dramatically. So I don't think we'll get a rate increase this year. I think we'll hold steady. If inflation continues to come down, there could be a a scenario where we see that growth is starting to really come down as well, and that maybe next year we do get a Fed cut. But all of this is to say that if you are a consumer and you're looking out at the future, what do? You take a big, deep breath. You continue to run the numbers, for example, if you want to buy a house or you want to buy a car. You really be careful about trying to make big decisions around your portfolio. I've been hearing from tons of people on my podcast, and they're like, I'm going to be 100% in cash because I can get 5% on my money right now. And what I will tell you is that is market timing, and it really doesn't work. You will not know when to get back in. So try to stick to your game plan. I know it's really hard to do.
Think long term.
Yeah.
Try.
Wise words from Jill Schlesinger. Thank you so much,
Sure.
Jill.